Happy Thursday. I am going to be trying something new in these newsletters, which is going to be doing a lot more videos, especially for the real estate specific content. I feel like it'll just be a little bit more engaging and it might be a little bit easier for me to kind of talk through some of the things that are going on throughout the year. Today, what I want to talk about is really your buying power and how mortgage rates affect that buying power. So, what we'll talk about is what a 1% drop in mortgage rates actually does for your affordability and how it drops your monthly payment and the interest that you're paying over the term of the loan. So, I'll share my screen and I'll walk through a mortgage calculator with you just to kind of show you exactly what that looks like. All right. So what we have here is Mortgage News Daily, their mortgage calculator. Just want to show you exactly what a 1% drop in mortgage rate actually means for your buying power. So as you can see here right now, the rate for a 30-year fixed loan is 7.14%. So that's going to be right here in the interest rate side of things. I put the median home price for Essex County, Massachusetts last year, which was 715,000. We're assuming a 10% down payment, so your loan to value is going to be 90%. Now, obviously, this is a free website, so if your down payment or your numbers in the areas that you're looking are a little bit different, or if you want to chat about what different areas are looking like, you can always reach out to me and I'd be happy to help. The bottom area here is going to be some optional information. So we're talking specifically about single family homes. For home insurance, you can assume about a $1,500 bill on an annual basis for home insurance, but you could obviously shop around for prices. And then for taxes, property taxes that are paid within your mortgage, I just put down the average for Essex County, which is around $6,000 a year. Different towns will have different property taxes. So if you are targeting a specific town, just make sure to look up what the average property tax is in that area. So as you can see, for a loan today at 7.14% of a mortgage rate, your total payment is $4,966.90. And the interest you're paying over the course of that loan is $919,000. So your total cost of mortgage is $1.56 million. And that's if you are sticking around for the full 30 years and not refinancing at any point. So, what does a 1% drop in mortgage rate actually look like? So, we can change this 6.14%. It's a pretty big difference, right? So, we're talking probably $450 in your monthly payment over the 30-year loan and a substantial drop in the interest that's being paid over the 30 years. So now we're looking at 766,338, which if we go back to 7%, 919. $156,000 of interest that you're saving plus 4966 monthly to four. Lower that rates drop, the more people that are going to come off the sidelines and jump into the action of bidding on homes and putting in offers. All I wanted to do here was show you what a 1% drop would actually look like in terms of your buying power. But there are options. Obviously, I don't have a magic ball. So you can't plan on rates dropping a substantial amount, even though economists are forecasting rates to be around the 6.5% range for the next 2 years. If your space is getting small or you need to make a move, you need to be able to make a move whenever your life dictates that. So you do still have some options to try to increase your affordability. The first would be, if possible, to increase your down payment. Offering a higher down payment reduces the lender's risk and potentially qualifies you for a better interest rate. The second would be to buy down the rate with points. So you can negotiate with the seller to cover discount points or points on your mortgage, which are upfront payments to lower the interest rate over the life of the loan, especially if we think that rates are going to be dropping in the next 3 to 5 years, let's say, you can buy down your points on the first year or two and then refinance when the rate gets to be a little bit closer to what you bought down on. You can also negotiate concessions with the seller, so you can use some of those funds towards closing costs and free up your cash for rate buy downs. If you have the opportunity to, you can try to improve your credit score before applying, which leads to better mortgage rates, and being able to pay down your debts will obviously give you a little bit more cash and a better debt to income ratio when you're going through the approval process. Another option would be to shop around for different lenders. We work with a ton of great lenders, so we can obviously provide those options for you. But it's good to speak to a number of different lenders and learn different programs that they have that might be better suited to your particular circumstance. Another thing that you could try to do is consider an adjustable rate mortgage. So if you do plan to sell, if it's a starter home and you're buying for the first time and you plan to sell within the a few years, 5 years, an adjustable rate mortgage might be a good option for you. You can also opt for a shorter term loan, which is a 15% loan, and typically those have lower interest rates than a 30-year loan. The other option that you can use, and that's why working with a real estate agent who knows the area is really important, is that you can just put forth a really competitive offer that eliminates risk for the seller, but will also give you some leverage when you are looking for different concessions or the seller to potentially buy the rate down. So there are options for you if rates don't drop to the level that is more palatable for you and your particular budget. I really hope that was a helpful exercise. If you are thinking about buying a home or thinking about selling and buying your next home, just to understand mortgage rates a little bit more and what drops could actually do for your overall buying power. Before I started doing real estate, I really had no idea what any of that stuff meant. It can certainly be overwhelming. So I hope that was a helpful exercise for you. And even if the rates don't drop, you do have a ton of options. If you have any questions at all, or just want to have a hassle free conversation about what you're thinking about doing, or maybe you're planning to doing, I'm happy to be a resource and would love to chat with you. You can give me a call or text me anytime and we can schedule a quick chat. I hope you have a great rest of the week, and I'll talk to you next week. See ya.